More record highs today, but it's a bit of a mixed bag. Let me explain. As I said, on an intraday basis, lifetime highs. So basically, yesterday we were at lifetime highs and closed at those lifetime highs. Today, earlier today, we made a new intraday high. It doesn't look like we'll close at a high. We've sold off just a teeny little bit from there. Tomorrow's gonna be an interesting day because it's so funny. You've probably seen those sort of like, what's driving the market? Fear or greed? Fear or greed? And there's usually like a kind of a potentiometer, a scale, almost looks like a speedometer, old analog style. And it's ridiculous because these days, like, well, fear is driving the market. Everybody's, what? Fear? Are you kidding me? The VIX is at 12. Out of every 1,000 stories written about the market, 1,000 of them are bullish. We're at lifetime highs. What? So I don't know where they're computing this stuff, but there's no fear. It's I think we're pretty much in the greed territory. So with all that bullishness, it'll be interesting to see if it sticks for tomorrow. Last I looked, Nvidia was finally seeing some selling. Nothing calamitous, but it was down like $20 or something like that. It's something. And that obviously will be continues to be the principal foundation for the global equity market entirely. So it's all up to Nvidia and Jensen Huang at this point. IWM is down about 2/3%. This fib right here, this blue line, seems to hold some sway. It had hemmed in prices yesterday. We've backed off away from it today. The most bearish thing that could happen in the medium term or even the short term would be a failure of the 201.65 level. We've held above there since we've been blasting above it on May 3. The cubes are down a tiny bit. As with the spider, intraday lifetime high. Doesn't look like we're going to close there, although you never know in the final 40 minutes of the day, especially since they get that sort of patent pending buying programs flying around. But for this moment, we're off those highs a little bit. If selling does occur, it will probably occur with some alacrity because we've had a very swift ascent to these heights. And as I mentioned yesterday, with very poor breadth, it's like 500 stocks and there's like 3 of them that are doing all the heavy lifting, one in particular. The diamonds are actually up a little bit. We peaked on this one. It's kind of out of sync with the rest of the market, where the cubes and the spiders lifetime highs. Diamonds, no, weeks ago. Did it on May 20, fell quite hard, and we've sprung higher and essentially erased half of that drop from May 20. And the most interesting one, which I wish was more tradable, is the IYT. This is the transport. I don't know why this ETF is so unpopular. I mean, everybody knows the Dow 20 transports. It's a very important index, but for some reason, IYT and even worse, the options, nobody's trading it. But I would say that 64.83 is a good, aggressive, that is to say very conservative, stop loss on this particular pattern. This is a very well-formed top, and just to kind of put a bow on it, let's just put a lower line like so, make it green to suggest support, and so you can kind of see what I'm talking about, everything above that green line. Jumping overseas here, EEM, the emerging markets, zooming on this, I would say important resistance on this is this gap, 42.88. We have over the past 3 days erased a goodly chunk of that brief bout of weakness. Gaps aren't nearly as important for the likes of EEM because it's just the nature of time. If you're measuring markets that are largely based well outside our own trading hours, you're going to get some gaps. So there's that. One of the few stocks that's really getting hit hard today is 5 Below. This stock looks like it has kind of a history of topping out. You can see a top here and a big plummet, another top here, and it's a good drop. It's not as big as this one. And then most recently, like so, we had peaked on this one way back about 13 months ago at around $220, and we're not quite half of that level now. It's been fighting its way back. It opened at the weakest point. It opened at 107.72, and it's been kind of climbing all day, but it's still a pretty hard drop. Okay, I made mention of NVIDIA. I'd said something like $20 down, $19 down, and it's actually a little more than that right now. It's off $23 and change. And I'll just get rid of all these lines, and you can just see in very raw terms. And this is a log scale, remember, just why this stock is so world famous. And just to get really dramatic, we can just show a linear scale, and that illustrates nicely that almost all of the nominal price rise for the decades this has been around has all taken place in the past 28 months or so. We were down pretty much at $100 in the autumn of 2022, and we've gone up 1,100% since that time. So this is, I don't, for obvious reasons, don't typically use arithmetic graphs like this, but when you want to make a big splashy point, that is the way to go. But we're going to change this to a more sensible scale and put our little drawn objects back. I will mention, and even a nasty old bear like me, NVIDIA is kryptonite. I do not go near this stuff, but I will say that we're definitely on the high end of things. This trend line is anchored all the way back to August of 2022. We approached it here, tagged it here, and we're right up there now. And clearly the news which is driving this is the split. And I don't know the history. I'm sure this has probably been analyzed to death, but I don't know the history of like what happens to major stocks after they split. Do they rise? If so, for how long, etc. I just don't know, so I'm not going to guess. But whatever tension is related to that forthcoming event will be released next week when it has split. And we can see, they'll come up with some other reason to promote it, but that's what it is now, the 10-for-1 looming split on NVDA. In sharp contrast to this volatility, there's Tesla. I jokingly mentioned yesterday, just if somebody asks what Tesla price is, just say 175, you'll be close to the truth, and that is the case for weeks now, ever since, for about a month. Look at this, just, a few pennies here, a few pennies there, just clinging very tightly to that fib level, 175.32. Maybe it gets a little below it, comes right back. Maybe it gets a little bit above it, comes right back. So this, we had talked earlier for months really about the behavior of the prices with respect to these fibs, above, below, and now it's sort of like got it in its grip. You can see it's just amazingly unvolatile. This one I wanted to show simply because it's illustrative of how a bullish looking pattern can spoil. Because this one, carve out the past couple months, this is a terrific looking chart. It's got a nice bullish base, it's well formed, it's lengthy, it's got a growing volume, all the elements you want to see. It's about context. If this were, say, 1982, it's just like, well, just buy it and forget it, set it and forget it, move on. This is overall a very, 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 very richly valued market. And so even bullish looking charts still hold risk, except for NVIDIA, which never goes down. But you can see here, look how quickly it's spoiled. And we have completely erased all of the gains after the breakout, and we're well back into the pattern now. So that's Couchbase. Also, I don't know if you're a space nerd like I am, but I watched live the launch today of the SpaceX Heavy Starship, or Starship Heavy, whatever it's called. My boy saw it live. He was down there in deep South Texas watching the launch, and I think that probably is a good part of the reason why Intuitive Machines isn't having such a hot day, because you'll recall this is the company that set about to put a lunar lander on the moon. And it did so, and so anticipating that landing you can see the run up here, a lot of excitement. And they did land it, although not very peacefully. It kind of went mush and landed at a hard angle. And since then it's sort of withered away, and then today, we've been selling off like so. It's just an illustration of how news with related companies can inform the price behavior, because SpaceX, they're doing amazing. And if they were a public company, I'm sure they would be a fantastic stock, but they're not. A couple of brokers that are continuing to do well. We've had plenty of bullish things to say about them all year long. Coinbase up 2 2/3%, and a chart I like better, and I've always liked better. It's much cleaner. Is Robinhood up over 7%. This had a devil of a time escaping these progressive scallops. It just looking at failure to launch, failure to launch, failure to launch. Finally, it got it kicking. And now we're in a nice series of meaningful higher highs and higher lows. So yeah, like I said, up about 7% on that one. These will definitely be informed by what crypto does. Those two previous mentioned brokers, Coinbase in particular. And so Bitcoin remains above 70,000, but it really needs to make another notch in its victory post here. 73,750 was the peak back in mid-March. And if it can beat that, and it's looking pretty good, but it's got to beat it first. If it can beat that, then I think that excitement will just flow into those kinds of related companies. Silver having a good day. SLV up over 4%. What I've done is I've moved this horizontal down to a more sensible level. What I've done here is that the low we've seen post breakout is 26.84. And as you can see in this, particularly here, this whole zone, this was a bullish base building starting way back in summer of 2021. So for 3 years now, this has been crafting this bullish base. It broke out with a lot of gusto in early April, went flying higher, lost all of that, but, underlying but, it found stability. It didn't fall past support, and then it began a new ascent. And so this is actually looking pretty good. And of course, in this case, what it needs to do is beat those highs that it's seen over the past couple of weeks, which isn't too far away. I mean, one day like this, and they would have done the deed, and that would be a new multi-year, be the highest level in like 11 years. And this doesn't take inflation into account either. So, but anyway, that's looking good for silver. XLU doing okay, having a pretty good day here. What's XLU doing right now? It's down about 1%. For something like that, that's a good move. And we're moving farther away from, and we're gonna do it again. Let's just add another support level right there. That's the next critter to break. And if we get some real action tomorrow, post jobs, we could do it. That's 70.25, and that's definitely my biggest position, just September puts in XLU, and that is at long last behaving itself properly. And you can see it in a different way by way of the cash index, the utility index, like so. We've got our diamond pattern, and then we had our strong ascent here, which petered out at that dashed blue line, like so. And so if we continue falling, the next big test is going to be this fib right there, if we can get below that. At the top of the program, I mentioned the importance of watching the bonds. TLT continues to be strong. We have sealed this gap. And if equities are going to continue making lifetime highs, it's got to zip higher than this. It's got to have a jobs report which is kind of bond friendly. So that'll be key. A couple of ratio charts to share. This one is the Nasdaq 100 divided by the small caps, the Russell 2000, lifetime high, and an extraordinary run all the way back to 2006. So massive outperformance here from the Nasdaq 100 to historic levels. Never has this ratio been higher. I also wanted to mention this critter here, which is kind of a cumulative index of winners and losers. Quite obviously, we've had a very strong few months here, but we are well below those kinds of lifetime highs when it was just raw, unadulterated strength through the middle of 2021, and then under the surface, things started to erode.